So there's a beautiful concept about what we're going to talk about here in this video, okay? No matter if you think a recession is coming, if you think a soft landing is coming, it does not matter. In specific regards to Tesla stock, what I mean by this is something big is about to change soon. Granted, if we have a soft landing, this will happen faster. If we have a hard landing, this could happen a little slower, although certain aspects of what we will discuss here in this video could actually speed up. So I do want to preference this video with saying it really doesn't matter the ultimate outcome of the economy. Within the next couple of months, you are going to see a massive shift in the way the markets are looking at AI. Now, let me ask you this question, and I would love your opinion down below in the comment section, and I'll give you mine. Do you think AI is a bubble or not? It's a simple question. Well, if you say it is, then I would ask you this question. Is AI a bubble of expectations, or is the technology actually going to fail? Okay. How many of you guys think the technology is actually going to fail? Meaning that 10 years from now, AI will not even be talked about. It will not be a part of our lives. That's what I generally think of as like a bubble, a technology or fad that comes along that ends up leaving. Now, by any stretch of the imagination, AI is not that kind of bubble. AI is going to be here. It's going to be around for the rest of our lives, and it's going to help things. It's going to hurt things. There's going to be good and bad parts about AI, and there's going to be an investment cycle around AI. We've already seen this start. It's already happening, okay? Now, to the latter, for those of you guys that think AI is a bubble of expectations, I agree with you, because I think expectations are extreme in the semiconductor areas of this bubble, if you will, of this AI revolution. And I think the other area of AI is not being looked at all. See, you have the GPU providers, the semiconductors that make AI possible, okay? That's where all of the attention has been. The other area of AI is the companies that are actually going to apply this AI. Now, a lot of Wall Street believes the winners of this applicable AI revolution will be Microsoft, they will be Google, they will be Apple. And yes, they will be winners of this. But they're not even talking about Tesla yet. Now, it's actually funny, because if you've been an investor for a long time now, specifically when Tesla hit new all-time highs, or fresh all-time highs, you got to pull up the weekly candlestick chart to kind of put this into perspective. This was when Tesla was $414.50 per share. Tesla actually split after all-time highs. So at the time, Tesla was like $1,200 per share. Okay. Maybe a little bit more, give or take. This was back in late 2021. Okay, at this time, everyone was talking about the robo-taxi network. That was all the hype. Okay, Tesla was trading at a 1,200 times multiple. And yes, let me say that again, a 1,200 times multiple, and Wall Street was defending Tesla's valuation because of the robo-taxi network. But now Tesla's made vast improvements to the potential robo-taxi network. Let's call it FSD. And you've actually seen Wall Street start to pay attention to AI. But yet that has not translated into Tesla stock performing well. If you were to compare apples to apples here, and let's consider economy, interest rates were the same as they are today in 2021, right? 0% rates, economy's doing just fine. Tesla stock today would probably be an $800+ stock. on these prices, not just where it is today. That's just based on those factors, okay? Now, let alone when we actually launch the robotaxi network, and you can make an argument if Tesla's P multiple even got anywhere close to 1200, Tesla would be a lot higher than that. The point I'm trying to make here is Wall Street is vastly underestimating Tesla at this point. They're not giving Tesla any credit for the improvement that has been made. Part of that is not Wall Street's fault, okay? As the Fed has been higher for longer, this hawkish rhetoric, there's been higher delinquencies, there's been mixed data on the economy. The last place you would want to be during a recession is in a car company, okay? Car companies historically do very bad during recessions. And let's be honest, Tesla really hasn't lived through a recession from that standpoint. Yes, Tesla did go through the 2008 financial crisis, but at that point it was a baby company, okay? With baby problems, if you will. Yes, Tesla was 2 weeks from going bankrupt. We all know the story. If Elon had not got financing on Christmas Eve back in 2008, okay? That financing saved Tesla and allowed Tesla to become the company that they are today. But as far as being I won't say fully built out company, but being a more mature company to actually live through a recession, we really haven't seen that for Tesla. You can call COVID a recession if you want to. It wasn't. Let's just be honest. It wasn't, okay? The government, the Fed, everyone stepped in to bail things out. So even from that perspective, we don't know how Tesla would operate during that kind of environment. I would argue we've been in a recession for years, at least a consumer-based recession, at least for the last year now. And from that standpoint, Tesla has done just fine. But from the aspect of potential risk, Wall Street has assigned Tesla a lot of risk if the economy does go through a downward slide. And the jury is still out on that. Okay, let's just be honest. We could go into a recession. We could have a soft landing. Okay, if we have a soft landing, then what I'm about to explain next will happen a lot faster. Okay, if we have a hard landing, there's going to be more pain in the near term, but it could actually speed up certain aspects of what we're going to talk about. Okay, and really what I want to talk about here in this video is the 3 stages of AI investment. Okay, you have the semiconductor hype, the enablers of AI. The next round, wave 2, will be less hype on the enablers, less hype on the semiconductor providers, and more hype on the appliers of this real world AI. Who stands to benefit the most from this AI revolution, this AI technology, stands to benefit the most from the products they bought from the enablers, okay? Number 1 by a long shot is Tesla. There's nobody that stands a candle to Tesla's potential in AI. Now, I still think we're in phase 1. I think we're entering into phase 2 over the next year. Now, if we go into a recession, okay, we're going to see some sharp pain in the near term. Rates are going to be cut down to 0%, perhaps 1%, 2%, somewhere much lower, and that could create less of a valuation barrier for Tesla, right? If your risk-free yield is 5% in short-term treasuries, it's not a lot that's appetizing about a potential recession and a steep decline in Tesla stock if you can get 5% risk-free in treasuries, right? But as that treasury yield goes down and essentially goes away if we do go into a recession, then very quickly investors will start to realize we have to start taking more risk or we're not going to, yield anything good, right? So I think from that perspective, rapidly cutting the interest rate from the Fed, it's not going to be great in the near term for Tesla, but it will speed up the I guess, risk to reward proposition in investing in something like a Tesla. And at that point, it's kind of like ripping the Band-Aid off. Okay, getting stimulus measures out there, and investors can start to look ahead to a better economy and, investments that will start to do better. And then I think ultimately, this AI revolution is not going to die. So at that point, maybe you take some of the momentum away from semiconductors, and Wall Street starts to deploy new capital into AI enablers. And I don't know if you want to call Google an AI enabler or a AI applicator, right? If you want to call Microsoft an AI applicator, you can call those companies that if you want to. But Tesla is by far in the lead, okay? So that's kind of the hard landing argument. More pain in the short term, faster acceleration towards, potentially higher valuations, a more optimistic, clearer path in the economy, and what could be a faster shift from the phase 1 of this AI revolution to phase 2, which will undoubtedly benefit Tesla more. Now, with that said, if we have a soft landing, then we're going to get a more methodical, logical, and systematic path of rate cuts, okay? This is going to sound boring, I know. Just 25 basis points, 25 basis points, 25 basis points for the next 2-3 years, potentially. Now, I'm sure there will be periods in which, the data starts to look worse. Maybe not, recessionary, but starts to look worse. And perhaps the Fed may cut 50 basis points at a couple meetings, okay? Just like on the way up, they started at 25, went to 50, went to back-to-back 75 basis point rate hikes, right? Perhaps you could see something similar on the downside as well. That's always a possibility, that we kind of get this medium ground where it's not super slow, but it's not like cutting to zero overnight, okay? And that is a very real possibility as well. Now, in that scenario, I would expect less near-term pain for Tesla stock, more, I guess, volatility, right, for a longer period in time. It will give you more time to, buy this dip from all-time highs we have seen in Tesla before the ultimate run. But I think the path in both the soft and hard landing leads to the same conclusion. We are about to enter into phase 2 of this AI revolution. And this phase 2 is going to last a very long time. Now, I want to be very clear. I don't think GPU providers, semiconductor providers, are just going to collapse, right? That's not what I'm expecting. I just think the attention will change. Right? They're still going to do well. NVIDIA is going to do well. Other companies that service data centers, provide cleaning equipment, whatever it is, they're going to do well also. So I don't think you want to give up on those areas necessarily. But I do think the attention, the new capital, will start to go into the applications of providing real world AI in this second wave of the AI revolution. And this could last years. Right? And there's going to be times where different companies get the hype and momentum. But again, I do think by far number 1 on that leaderboard is Tesla. And this Robotaxi event on October 10th is really going to put that to the forefront of investors' attention. And that is coming in now less than 2 months. So I think that could really start a lot of excitement or momentum around the Robotaxi network, okay? And again, I don't know, soft landing, hard landing, there's different paths to this, but I do think either way, soft landing, hard landing, within the next 3 to 12 months, for sure by 12 months, in my opinion, you're going to see a lot of attention turn towards Tesla, okay? Because the problem that Tesla is trying to solve with full self-driving has so much value behind it, okay? This is not a problem that faces 50 million people. This is a problem that faces 8 billion people. If you want to get more specific, maybe let's say 4 billion people, half of the world that is more developed, that has cars, okay? Just call it that. Maybe more or less, you understand what I'm trying to say here. This is a problem that basically affects everyone. The Simple calculation to wealth is solving problems. The bigger the problem you solve, the more money you will make in your lifetime. Okay? Amazon, Facebook, Tesla, all of the great companies in the world. Just think about that in the equation of wealth. If you solve problems, you gain wealth. Okay? Tesla is solving the biggest problem of them all, besides health-related issues. There is no bigger problem than people dying in cars and people spending money on cars that depreciate in value. People needing to, spend what, Warren Buffett would say is the biggest waste of time ever, just driving your car, right? Commuting, not being able to do other things, paying attention to the road. Warren Buffett actually says that's like the worst thing you can do is commute like 30 minutes to work every day over the course of 40 years. That's a year of your life that's gone, right? So even from Warren Buffett's perspective, that's a problem. So there's so many different areas of a problem that I think Tesla is solving, okay? And that kind of problem being solved is going to amass massive wealth. So even in the near term, because Wall Street likes to price things in ahead of time, and when you actually get hype going, like there's really no limit to where Tesla could go in relation to the problem that Tesla is trying to solve. Now, Optimus, that's on a whole new scale, okay? We aren't even talking about Optimus, okay? Optimus? Huh? How do you even start with that? Okay. God, dude, it is almost impossible to value Optimus, okay? Because there can be so many applications for that product, okay? That literally, like, Tesla could be NVIDIA's valuation today, and I would say that makes sense. Because the problems that are being solved are immense. Now, again, it's important to the point that I mentioned earlier, as rates are this high, you have to discount future earnings a lot, right? If you're going to get 50% in a 10-year treasury over 10 years with a 5% yield per year, it doesn't make as much sense investing in Tesla. But as rates do fall, as that is the path that we are now on, it becomes more of an obligation for fund managers to invest their capital for a long time horizon. So I think that has been a big kind of negative influence to Tesla. So with all of this said, those are the first two waves. The semiconductor providers, the first, boom, put AI on the scene, enablers. Okay, let's call them that, enablers. Number two is the appliers of this technology that the enablers gave us, hence the word enablers, semiconductors, GPUs. These are companies like Tesla, perhaps some of your big tech names, although I think it's going to take a very long time before AI is any kind of meaningful portion of any of those companies, like a very, very long time. Tesla, AI, it could become a large portion of Tesla's business in a relatively short amount of time, right? So I think there's other winners here. There definitely will be, but Tesla is by far the biggest, just with FSD, let alone Optimus. That like tips the charts. Nobody's ever going to compete with Tesla in that sense, okay? So that's number two. The third wave of this, which I think will be ongoing for many decades, is the AI losers, okay? AI is going to change the world. It's going to change the economy. It's going to change the business cycle. It's going to change everything. And there will be some companies that will not survive. But let me tell you, Tesla's not one of those. Tesla will be the success story, the biggest success story of AI, period. So I think this is more in the next 3 to 12 months, this information. You need to know this. Now, in the very near term, before the Robotaxi event on October 10th, I do think there's going to be a lot of concerns about the economy. And I think we're going to be in a very volatile market, and Tesla could fall from here. We do have NVIDIA earnings coming, not this week, but next week. We have Fed Jerome Powell speaking this upcoming Friday at the Jackson Hole Economic Symposium. He's going to outline the Fed's going to start cutting rates. We already kind of expect that. Markets have bounced a lot, so don't be surprised if stocks fall here in the near term. I'm not saying it's going to be up and to the right coming Monday morning and every day after. No, I'm just saying over the next 3 to 12 months, there will be a change in the way that investors look at Tesla, value Tesla. And again, I would not be surprised if Tesla is a $600+ stock at some point next year. That would be at least a 2x from here, right? 3x from here. Don't be surprised if that happens. And you heard it here first. And again, you couldn't convince me I'm wrong on this. You couldn't convince me what I said in this video will not happen. The timeline, who knows, right? Maybe it's closer to 12 months. Hell, maybe it's 24 months. Who really cares? Because we're talking about massive upside potential. But again, in the near term, there's going to be problems. There's going to be volatility. Tesla stock could fall 50% from here in a more doomsday scenario. If we do actually see those recession odds start to rise, or we go into a recession, Tesla could easily be a $100 stock. You need to be prepared for that. Okay, you really need to be prepared for that. Now, I do think there would be massive AI, like bailing out that would happen. There would be, stimulus and massive accommodation to the economy and the markets if that were to happen. So I think it would be short-term lived in nature as far as a potential crash. But you need to be prepared for the downside as well here. But I think if you understand any of what I said in this video and you agree and you realize these things, I think Tesla at $216 per share, 24 months from now, is going to be one of those, damn, I should have bought as many shares as I could moments. Obviously, looking back 24 months in the future from now. So that's kind of my perspective on this. I think in the near term, it's going to be really noisy. We also have the election. Didn't even mention that. Q3, Q4 earnings comps become a little bit more challenged on a year-over-year basis. But long story short, I haven't done anything with my Tesla position. I haven't bought any recently. I haven't sold any recently. I haven't bought any options on Tesla recently. When I do, you will hear about it. You will know about it. I will tell you when I think it's time to go in on some options, some short-term trades. I will not be afraid to tell you that information. And I do think in the near term, 220 is an important level. If we get above that, we could make a run back to 270. And if the economy does hold up and there is a soft landing, I think in the near term, Tesla stock could get a lot more price appreciation over the next coming months. But as far as that, it's hard to see what's going to happen in the near term. It's very easy to tell you what's going to happen over the next 12, 24, 36 months. It just is. So let me know your thoughts on this down below in the comment section. If you agree, if you disagree, what your take is on this. Again, let me know if you think AI is a technology that's going to just go away, like it's an actual bubble, or you just think it's kind of a bubble on valuations and expectations in the areas in which there's high expectations, like semiconductor providers. I don't think anyone can argue Tesla is nowhere even close to being in bubble territory. Like that's how you know Tesla has like no AI love right now. Maybe if Tesla was at all-time highs, past all-time highs, performing the same as kind of your other big tech stocks, maybe you could group Tesla in that category. But there's no appreciation of Tesla's AI prospects in Tesla stock. So let me know what you think about all of this down below in the comment section. Honestly, I could probably talk for like 2 hours on this specific topic, but we'll just go ahead and cut it off here. I think we got the meat and bones of what you need to know out in this video. So you guys enjoy your Saturday, and I will see you in the next one.